Okay, hi there guys. Just let me know if you can hear me loud and clear. With a few dribbling in, so who's in today? And if you, by the way, if it's the first time on, you're having a few problems with the YouTube channel, it's a bit fuzzy. You can go to, what is it? Hold your mouse over the bottom right-hand corner, will be settings, and a little spinning wheel. Click on settings, go to quality, and it should go to 720. We should just make sure it's nice and clean and clear. Anyway, if anyone's first to say we're coming through. Laurent, hi mate. You had a good morning this morning, Laurent. I was just reading through on the forum before. Doing well, mate. It's good to see you trying different things and really trying to improve your techniques. It's great. This might be handy for you today as well. All right, let's get up and running. Welcome to TradeSetup and the live stream for, what have we got, the 25th of Feb, 2019. So anyone that's new, welcome. I hope you can join and help us spread the word. Just remember, if you do like what you're seeing in the trade setup, it'd be great if you can like the, give us a like anyway on the channel, or if you join into us on Twitter or Facebook or anything like that, just like it'd be much appreciated. Now, g'day Helen. Still watching SPT. Helen and I both got our eyes locked on SPT at the moment. It's a bit like APT, and if you've got APT, that's just kicked off Afterpay. So it'd be interesting to see how that goes. Yes, anyone that's new, top left-hand corner, you'll see us on Twitter. What is it? @trade_setup. You'll find us. Once you get on there, you'll know who it is anyway, just to make sure. Top right is Facebook, if you can join on Facebook. But pretty much those two are just mirroring each other. We do use Twitter a lot more, a bit more active on Twitter. And the bottom right, subscribe to us at YouTube, which is @TradeSetup, capital AU. And you'll find a whole lot of old stuff on there. I'm pretty sure to be okay, but I might be having a couple of issues with my stream today. Don't know why, but if it is, just we'll see how we go. We'll plug away. Shouldn't drop out at all, but it's just having a bit of a tiny little issue. But anyway, you'd be glad to hear too. Anyone that's been following me for a while, I think NBN's coming in another month or so. So God, that's going to help out a hell of a lot, especially with the streaming. So we should get some much faster speeds and see this really kick up. So it shouldn't be. I'm guessing a lot less lag in the stream. A lot easier to get through, no dropouts, nice and clean. So that'd be great. I'm pretty sure that's coming. What are we now? Feb, about April, end of March, start of April. But they have been saying that for about a year and a half now. But I have seen the guys digging up, and now we're getting letters in the mail saying join us, APT, and all that. So I'm sure it's coming, which would be fantastic. Also, if you're new, just remember it's only general advice. So if you read smack in the middle there, general advice warning, it's not. We don't talk anything about recommendations. We just say what we like seeing, what we want to see on different trades we got going, ideas that could be working. So all that sort of good stuff. Let's get all this up now. I'll get the chart up. I'm just going to transition. There you go. So today, I'm just going to go through, what have I called this stream? I can't even remember myself. Just about entries and refining your entry. So I was having a good chat with someone on Friday, just about entries and how to, it's kind of, occasionally it's surprising how many people don't understand stops and things like that, but how to get in on different type of setups, and not trying to chase the market. If you've got conviction, you jump in, and you should be building your trades based around your trading plan or your style, to make sure you have convictions in your setups. But so by the time you come into doing the buy, all the hard work's done. You buy or sell, whether you're buying or selling into the market. So the hard work should be done. You should know what you're entering, what you're looking for, where you're going to be wrong, where you're going to be right, what you want to see, what do you do if you don't see that, what do you do if you do see that, and all that sort of stuff. It should be already planned. So basically getting in should be the easy part, and it's really just waiting and seeing. Of course, no one likes losses, and no one, put under pressure. It's always great when you get one Like we had on APT, for instance, we bought it the next day, it gapped up, and it's never looked back. It's just gone like a rocket. So they're fantastic, but they don't happen all the time. They're probably fairly rare, to be honest. G'day, Gino. Um, so it's always good to know what your plan of attack is because it stops you from doing silly things. Oh my God, we can all enter on stupid setups anyway, but it stops you from doing silly things, taking it too early, getting out too early, getting squeezed out of the market, um, not having conviction in your trade. So I'm just going to go through a couple of setups, but you can have a million different, well, not a million different setups, but you can have quite a few different setup styles to look at, entries to look at. But it's all got to do for me is understanding the context. So I've really got two sort of styles of entering, and one I use all the time, and the way I look at the market all the time. And then there's one I'm actually trying to work on a bit better. It's more for a trending market. So we'll go through just having a look at those. But they've always got to do with the context of the overall market. You've got to know what's happening in the overall, well, not the overall market, but the actual share. Um, you've got to have a bit of a bias. You've got to set all that out, where your levels are, what you're aiming for, how it's going to attack. If you come up to a resistance zone, if it attacks that resistance zone, and a certain scenario happens, what am I going to do? Am I going to stand back and just let it go? Let risk, or have risk a little bit looser. So if it does push through, pull back, you're not going to get caught in the pullback before it takes off again. And if it starts hovering just below a level, what do? You're not going to get squeezed out because that could be really building the base for just a blast through a resistance zone. Or if it touches on resistance, a few cents through and starts building a lower high, what do you do there? So you're going to have all these sort of scenarios. And that just comes through, I guess, knowing what you want to see, knowing your price action, and entering is very similar. If you flip it over, so if you buy a certain reason, if you flip it over, invert the stock, entering, exiting, similar type of scenario, and you're looking at levels. So it's once you can understand the price action and what's happening and what you're doing and why, then you can apply that to exiting as well. So we'll just click over a few of those today. I haven't got too many examples. It's mainly I was looking at the ASX, and you can see that's right on the screen now. So we'll go through a few of those. Any questions, feel free to ask on the fly. Or if you want to write down some notes and ask me later on, that's fine. Send off an email. Always happy to get back to you. And we can churn over a few things. What was I going to do? So yeah, the market, it looks like we're still in a holding pattern it looks like there's some more good news on trade in the US, well, between US and China on on Friday, and then they extended the talks over the weekend, and apparently all the news coming out there is pretty good. They're coming to terms, but they've obviously got to work through a few issues. How do they implement? I can't remember the word now, but how they implement the terms, all that sort of stuff. So I think the main thing will be coming when Trump meets President Xi, and I think it's later this month or next week or something. I can't remember exactly when, but he will meet up, and that's when I think most of the things will get nutted out and they'll come to some terms. So the market is a bit more positive on what's going on. You can see that with a good solid end to last week in the US. We opened up quite strong. We have, been chopping around. If you look at the intraday action, that's on a 5-minute chart, actually on a 1-minute chart. So this is the action day. Opened up strong. That was on the back of the news from the weekend. Then we've just been chopping around, popping up 61.90, straight back down again. So it is still, it is still chopping around the market overall, and that's because we're coming straight up to 62 maybe. We've been extended for quite a while, and it's just dragging in some more sellers, squeezing them back out, dragging in sellers, squeezing them back out. We've done that a few times. This initial reaction over Christmas is probably not really the one, but when we pushed up to 59, there would have been sellers selling in there just below the anchor. Without any real confirmation it's rolling over, sell it, and then turn around and squeeze back out. There would have been sellers just through here the last probably a week or two ago, just chopping around below 61, and now squeeze straight back out again. So the market's very bullish, has been since pretty much day dot this year for 2019. We're going to come up into some resistance zone again up at 62, so it might be a bit of a case that chops around there and squeezes back out, or this might be time rolling over. We don't know what's going to happen, and all we can do is trade what we see. And you've got to be bullish on stocks until this leg turns and we get some sort of lower high in here up into a resistance zone, and we've got a few ahead of us. We've got a few resistance, one around that 62 mark, then further up towards 63 to 63.50. There's going to be a zone up here. if we get through 62 convincingly and pull back, build another higher low, and just keep squeezing people out of the market, it'll just keep pushing higher. So there's no reason for this market. It's not bearish at all at the moment. It is chopping higher, and there's good news coming out between the US and China on tariffs. What I'm also concerned about is that, remember when Trump, anyone remembers back then when talk of Trump becoming president, any talk of that where he was getting ahead, bang, the market would sell off. Talk of Hillary winning, it would rally. And as soon as he came out and won, bang, the market turned, it flipped over, and everyone got caught that had been selling it on that news that he come in and bang, squeezed back out, and the market's been bullish since. So it could be setting up for something like that. I'm not saying that's what's going to happen, but it's a bit of, buy the rumor, sell the fact. It could be. This is what we're waiting for, maybe. We're maybe waiting for something coming out between China and the US. And as soon as they get organized, then it's back to the fundamentals. What's happening? Maybe the US is overextended. Maybe there is growth, slowing global growth to worry about the US dollar and all these sorts of things. They've been on the back burner for a while. So maybe where the US is at the moment, it could be viewed as a bit overextended. What's going to happen to corporate earnings next time round, next earnings season in the US? These sorts of things have come back on the radar. So the trader is going to be assessing, what happens from there. Are we rallying into the good news and then we sell off? If they come to terms, and it might take them a while to implement all that, and what they do come to terms with, but I think that's happening. It could be a 1 month, 6 month process. We don't know just yet. So all we can do again is just trade what we see. But just be wary of what's happening. All in all you can take is what you see on the chart. The market's definitely going up. There's no doubt about that. I was caught thinking it was going to roll over here, but it just was not. It was not giving any indication it was going to roll over. It wasn't. You didn't get any shocks to the downside. This is the initial shock we got to the downside. But there was nothing really to come in terms with, and that was after the markets really sold off. So that was sort of the last ditch selling effort. Then bang, got a green week. We're on the weekly chart. Green day, just in here. You can see which popped up. Next sort of selling on the next day was rejected down towards those lows, rejected, and then it was been bullish ever since. And that was on the 4th of Jan. So the 5th of Jan, 7th of Jan, sorry, it was looking quite good. And from there, that's when you confirmed that higher low, and the market started rallying from there. So that was sort of, once you get the higher low, big fan of higher lows or lower highs. Lower highs for shorts, higher lows for longs, and that's just confirmation that this market could be turning. And especially after you see it, after a big sell-off like that, don't anticipate them. Once they play out, then that's probably what you want to be looking at to become bullish. And it might be a bit more aggressive here. And then just from there, it's okay, where are we heading to? The next level would have been only a few points higher, back to 50, say 58, well, 57.75, then up towards that 59.50 zone, and it's blasted through all of them. So at the moment, all we can do is just follow the same trend. This trend is getting a bit long in the tooth, obviously. Nothing to mean it can't change. All we can do is trade what we see. And if the stocks are setting up, and there are quite a few starting to set up at the moment, it could be that the ASX gets stretched, and we can do something like we did earlier. It's probably mid of last year. Remember this type of price action? It was just choppy on the ASX. It's just chop, chop, chop. But it was a couple of months. It doesn't mean that individual stocks are going to be the same. There's going to be some performance, and there's going to be some laggers, and that's why you get this sort of balance through the ASX. But all you can do is trade the good quality setups on the individual stocks, and there's some that are going to run. So you can get a market like this, just keeps holding minor higher lows, minor higher highs, and keeps grinding out a few points every few weeks, pushing higher, continually does the same thing. And what you're looking at is individual stocks that are performing better. And that could be the same case. I mean, don't know where we're going to, whether we back off 62, whether we back off from 63 or 64, we just blast on up into new all-time highs. Don't forget whether this is a good correction. So there's been a few things. Just keeping an eye on this. Is that corrective action, good part of a year from 2015 straight down. This is on your weekly chart now. Cleaned out a few buys, and then we've had a good solid leg up, and this is your initial leg up from basically the end of the GFC. I think it's not 2011. Am I wrong? Oh no. So this is your GFC, pops up, chops down, squeezes out a few that would have still been a bit negative, and since about the middle of 2011, you can see on this weekly chart, we've had a good leg up. Good clean out, good corrective action lower on the weekly, and then a good leg up. So whether or not we can say this is a corrective action as well, because we've taken out a few lower highs, and whether we just start grinding back up again. But the problem is this action recently has been less of a grind for me and more of just a straight up. I'm viewing that rather than you can see 2016 after that corrective action low, we banged around lower highs, sorry, higher lows, higher lows, higher lows. If we can just see that, this was this action in here, high low, higher low. It did the same thing and just kept grinding up. We got up towards the highs just below 6,000, chopped around from here a good couple of months, and then took off, broke through the highs, and then we made up towards that 64 move. This action here was a bit more severe move down, and it's been a fairly severe rally back up. So whether we consolidate, we have a bit of a pullback. I mean, I'm always looking for some sort of confirmation. I wouldn't want to enter from having no positions to getting into the market here. I'm not tentative to get into the market, get into different shares or different setups, but you've got to respect what the overall market's doing. Because don't forget, when things fall over, they can fall over pretty fast and pretty quick. Doesn't mean your individual stocks is going to get hit, but you've just got to bear in mind where we are in the overall market, because if we start getting a bit of fear coming back into this market, it could drive down pretty quickly. So yeah, that's probably it. At the moment, I'm expecting a bit more heat. I wouldn't mind a bit of a pullback, and if we confirm a higher low, sit on top of these MAs, the moving averages around, say, below 6,000, then great, and we could build. Then I think that could take us up, and we could be continuation straight through those highs, and we could be, I mean, whether we are or not, gunning for these all-time highs over the longer term. Maybe towards the end of the year, you just don't know. But bearing all that in mind, but looking at the monthly, on the monthly we had a couple of red candles, one green candle, a couple of red candles, a couple of green, and it started really cleaning out. So that was a good complex type of correction to clean out a few buys, good part of a year, and then grinding up. This has been since about, I'm guessing, October. What's that month? That's August, September. So September it started rolling over towards the end of the year, and then we've lifted since the end of the year. So it's not as complex as this one. It's just sort of that smash down, smash back up. So whether we've got to chop around or whether this is going to be the high, we still got to take that into account when we're planning our trades going forward. Yeah, so that's the ASX for me. Let's get on to looking at what I was talking about earlier, some entries. Any questions just on, we probably don't need to go into the US. I mean, it's still kicking up. All the other markets, not much has changed the last few weeks. There could be some more news out of the US on China tonight. I think that news, if it's going to take a while for them to come to terms, obviously it's all positive at the moment. I think that's going to support the market for the rest of this week. But we'll see. We'll see how it goes. I think it's still, like I said, we are a bit choppy. We're only up 6 points. We've been up about 20 or so. What's the high today? High today is 61.91. And we're trading down 73. It's good, close to 20 points up from here. So we're about 24, 5 points up at one stage. Now we're only up 5 or 6 points at the moment. Yes, the setups. What I might do, so what I'm always looking for, and we've spoken about this many times, I guess you all know what I look for. The way I trade, there's two, get rid of you. For me, I like to see good corrective action. I like to see that I'm getting into a leg. It could be a weekly leg up. So if this is your week, that's one leg up on the weekly. That's your pullback. I'm ideally looking to get in, say, somewhere around here. Okay, so I'm like a good leg up, pullback, expansion up on the weekly. So I'm looking for that secondary leg up. Now, don't forget, you break that down when you're looking at the daily. The daily could be broken down to something, if I can draw this properly, something like this. And then you get, you might get, well, if we can just draw that a bit better, we might get something like this. And whether don't worry about the anchors just yet. We get that, and then we start to go. And this is ideally what I'm looking for. All right, so that's my entry. I'm looking at my daily. I mean, that might be a better higher low, but that's ultimately in red what I'm looking down to the daily, potentially just watching for that that weekly, that new leg up, because then for me it's just a matter of measuring from there to there, projecting out where you could be aiming to. If I can do that in yellow. Whoops, that didn't go yellow, did it? So I'm looking up, that's your leg up, and potentially that's your secondary leg up. So that's all I'm ever, trying to do with my style of trading. I'm trying to look in that zone, trying to look at a good quality setup. You know, we're cleaning out, especially on the weekly, when the weekly trends up. We're having that clean out of late buys into that first leg up, cleaning them out, resetting, building your high lows, showing some strength of buying that are coming back into the market, and trying to take advantage of that run up and getting nice and early before you get that sort of breakout of the weekly high. And you know, you get those breakout traders, because if it doesn't play out, you've got some fat in your trade. You can take a small profit or break even trade. So that's the way I'm trying to analyze my trade. That's why I'm trying to organize or plan for my trades. Now, there's other ways too, and I'm working on these. I'm just trying to trade from the dailies, and that's just really just trying to get in either here, without your weekly, and that's just all part of one big week trend. It might be this leg up or whatever it is on your weekly, but it's trading from the intraday action, because you never know how long these legs are going to be, how big, where they're going to stop, especially in shares. And that's probably because I'm trading like this, I'm looking for that complex correction to buy into the next leg up. It just comes from the futures background, and that happens quite a bit. And trading off your different charts and organizing whether it's a half an hour, hourly chart, 4-hourly chart, and dripping it down to the 5 minute for your entries, or 1 minute even. So it's quite fast, and it can happen more often, a lot more often than what you see on your shares. But that's where I come from with this type of setup. But what I'm trying to work on now is entering into this zone potentially on the daily, and just looking for that daily continuation up, and just taking advantage when the market, especially, and like Davin's always mentioned to me, when the market's in new highs, everyone's a winner, and no one really wants to close out. There's no reason to close out. There's no resistance zone to come into. There's no good reason. Then you're going to get fundamentals that think it should be a lot higher. So everyone's just looking to highs and just looking to see how far they can ride it. And so that's why, especially if you got, you know, something like that was your previous high, broke through, then you pull back, clean out a few late buys, and then you're looking for an entry here. But these two styles of entries, if I can draw that, say buying in that zone and buying here, are just slightly different. So this is the one that I'm working on a bit more, and it's not really from price action. It's pretty hard to drill down from your daily. You don't really want to drill down to a 30-minute chart. You might have to use candlestick entries, if that's making sense. So by that, we'll show you what I mean in a minute. Rather than not worrying too much about your candles, but you're looking more at higher lows. Higher lows meaning buyers are jumping in, you know, it's pullbacks, and a lot of the times you do get these two-legged corrections lower. So 1, 2, squeeze out a few people. There will be a few people that buy in here nice and early, and they might get squeezed straight back out again. And as soon as you get, it doesn't mean it's always 2. It could be 1, 2, 3. That makes sense. You might have 1, 2, or you might even get another sort of leg squirt lower and then start to build, and it might chop around here for a while before you start to lift. But what you'll see is a clear, some high lows starting to build, something like that, which is just showing that buyers are getting a bit more active. They're at a zone where they want to jump in, they want a piece of the action, and then we're going to be looking to see if we can get that run up, and we're just looking to jump on board. And the other premise behind the trade, well, this is, and this, yeah, it's the same sort of premise. You don't want to buy, or what I'm always looking for, and I've always learned that from Davin and others over the years, is to go from contraction into expansion. So here, with this setup, we're aiming to buy into expansion on the daily chart. Here, we're looking to buy into expansion on the weekly chart, from the weekly, using the daily charts. That makes sense. So we've had expansion here, we've had some contraction to clean out a few, and then we're looking to buy in that zone. So we're going back into expansion, and we're trying to buy when it's probably going to be the most difficult. It's going to be the most difficult. It's going to be a bit hairy for you, but that's where your risk is lower and your rewards are higher. Does that make sense? You want to buy in the unknown. If you start buying on a breakout, say on this weekly chart, where are you going to have your stop? I mean, you can easily have your stop in here and get cleaned out, and it's pushing back up, or you could really got to have your stop below the most recent high or low. That's in my theory. I don't like using a percent risk rule or below a couple of candles. I don't like that sort of stuff, because I think you can get cleaned up quite easily and be right, be completely right. And you have to go and re-enter, and it's always harder re-entering at higher prices than you've been in before. Does that make sense? So we're looking for expansion, contraction, expansion. So here it's expansion, contraction, and so on. And we're always looking to try to buy with a nice clean setup into expansion. So one, we take little heat on the trade, and we're not going to be forced to do something stupid and get it wrong. And then we're just making the most of it. We're making the most, if we can make 10% gain by being in the market for a week, as opposed, okay, someone might go, oh, look, I made 15%, but they've been in for 6 weeks. I would much rather go a week for 10%, give up a few gains, take that 10% and book it. And then you can do that 3 times over the 6 weeks. You make 30, they've only made 15 in that same capital that you've put into the market. So that's ultimately the premise behind trading, what I think it is anyway. So correct me if you're wrong, if you disagree. If you disagree, I'll block you. So yeah, that's what style sort of I'm looking for. So if we go through um, looking for high lows in context to structure, I want to go to probably, yeah, now there was a good one. Here it is. This is on the ASX, and this is when Trump come in. So you got this double bottom here. We've probably got a lot of them here. Oops, let's just go back a bit more. So you can see, and if we go back to the daily, I'm concentrating on this zone here and anchors. So what we've had, discard that. So first things first, what we were looking at, this is the main zone I concentrate on when I pretty much went to bearish to bullish. You can see that. But the reasoning behind that is because we'd already put together some context. We put together, the market sold down here and it's just kept going. You can see that. Then we popped up and we started holding some higher lows. So this was really a key zone where in here, yeah, you've got a higher low, but on your longer term time frames, that was your key zone. As soon as you punch through there and push back up, all this trend is up. Okay, right up until this stage. And this is when I think the elections were looming. So we remove the high low. Yeah, yeah. Well, pretty much. I'll talk to that in a minute, Lauren. So basically, you should be in since we broke 59.50. Was it 59.50 on the ASX? About 59.50. As soon as that was pretty much the anchor for me. As soon as you broke that, and you can see the market was getting a bit more positive. There's more setups, more people get on Twitter, more people are saying let's jump in. That was about that level. Unfortunately, it was quite a bit higher than the lows, but that's the nature of trading. It doesn't mean your individual stocks can't kick off. I mean, we got two that have just gone bananas, APT and SLR. They were setups after that broke that level. So if you can get some good quality setups on your shares, great. It's different to trading the index because it was a bit harder to buy when you broke through 59.50. Let's just look at it. Best fit broke through 59, sorry. It was 59.50, yeah, on this green candle. So this is a broke through there. That was the anchor for me. We had to press down, pop up, lower highs, pop up, retest there. So that's the anchor. You could have been a bit bullish in here, but that was really right at the start of January. I was away then. So this is the key level. If we got through that 59.50, then this leg down is clearly broken and you want to get active. So it was about there. I'm still looking for a major. I'm talking a weekly because this is all part of 1, 2. We haven't really had too much to lean on in the way of lower highs and anchors. That's just a correction. We could chop around there, but all I'm saying is we're probably stretched up here, the same as the daily and the weekly. Doesn't mean stand off, because if you are standing off, we've been stretched prior. We've been stretched up here before we broke that level. So if you just sort of keep sitting on your hands, yeah, you could be missing. This could just go straight up. So I would rather be, like I said, as soon as we got through that 59.50, we were happy to start jumping a few more. And we've got a few that we've been stopped out in, which is a bit of a shame, but that's the way it is. But we've had a few that have more than made up for it. So back to the ASX. So we've had this move down, and you can see that's changed. So as soon as we got this action here, that's changed in this zone. Okay, that action's changed up until about there. So what you can see, if you're marking up this, say about these highs, just say you were looking at it, you go, okay, where's my anchor to this move up? Okay, I'm looking for a pullback. Where do I want to get in? So from here, that's my anchor. The only reason I put it out here is because we didn't break. But what's happened, you can see the market's pulled. Say that you're just breaking this down to the smaller time frames. It's just broken down. All this time, there would have been bears just where, okay, we're going to roll over. This is going to be a massive sell-off, in context that, well, not in context. We're going to get a big sell-off because Trump's coming in, he's going to ruin the country, or whatever they were saying. But instead, all the market really did is just push straight back down, straight to that anchor. And I think it was 1 point higher say it was 5,000 anchor 50-50, it got to 50-51, I think it was. You know, within a point of touching on that anchor level. So pretty much that double bottom. So that you got to remember, always taking into context where your anchors are to the trend up. That wasn't broken. Yeah, all that was really done. You've had that leg up there was pretty clean, straight up. We've corrected that leg. We've come all the way back down to the anchor. Fear was driving that market down because Trump was coming in. And then as soon as you come in, you've got this big, this green candle. I think as soon as the US opened, bang, they just rallied and then took the market straight up about 300 or 400 points. And that would have caught a lot of people because the bears would have been talking it up. The news, anything you sort of read is if Trump comes in, it's going to be this, it's going to be that. Everyone wants Hillary, it's going to be better for the economy. But instead, the market's turned around and ran straight back up. So if you're watching the news, you're probably selling this whole time and getting squeezed out on this move up. And that action there has really just been built or has played out because of the fear. But all it really is fuel for a good move up to drive up and really squeeze out all these bears that have built up for the last few months. Does that make sense, guys? And we just did not break that anchor. If the anchor was up here, it could be a different story. It might be in a bit more of a complex. I mean, say this is what we did, and we did 1, 2, and we broke through that anchor. Then it might be a bit more complex, might get a bit choppier. And there's a bit more conviction in the selling then. But instead, all we really did was come straight back down to the anchor level and start to rally again. So technically, off this chart, and this is a daily, we should not have been bearish. All right, and if we can drill this down, and that's why at this stage, as soon as we got this, I want to really drill into that action. I'm going to find it again, don't I? Let's go to 16. I think it was here, straight after that. If you can see, this is all that action we're talking about. That's the move up. That's your 2 legs down. That's a major lower high on the daily charts, but it's all in context of this anchor on the daily. That's your anchor here. It's pressed up, pushed down, touched on the anchor and started rallying. So right here, smack, you can see that press higher. Couple of good green candles. You would have got a few bears rushing in here, but as soon as you broke up and through, and it was up and through that high of 53.70, and you can see that rejection. There's a rejection candle there. I'll probably make that a bit thicker. I'll drill it in a bit more. Just in here, you pressed up. For me, that's the double bottom now. We've retested anchor. That's your first sign that that anchor is going to hold, and bears are going to get squeezed out, and the bulls are going to start coming running in. Yeah, I think it was, Helen, same sort of scenario. If you sit there and watch the news too much and listen to all that, you're probably going to be, I mean, it sounds bad, you're going to be fodder for these moves up or the squeeze when they get put on. And that's why for me, it's all about price action. I mean, listening to the news and then see what's happening. And if you were watching the news here and you were listening to, okay, Trump gets in, it's not good. And then all of a sudden it bounces and you're going, hang on a second, that's not right. So what you can analyze, and as soon as you start getting a couple of red days here and a couple of good green days, you should have been thinking there, well, hang on a second, we haven't broken the anchor. Technically, we look good. We've touched on the anchor. We rallied pretty hard after we got in. What could be playing out for me is pure and simply a squeeze of all these bears in here, bears in here. Any sellers that have built up over those, was it August, September, and October? 3 months of sellers building up, and the story being pushed out, and everyone getting negative on a Trump win, are really just going to be fodder for this market to move up and squeeze them back out again. Does that make sense there, guys? So that's why it's important to know what is happening on the overall structure, where your anchors are, what's in play, where your support and resistance zones are. And if you do get your high or low, what are you going to do? What's your plan of attack? Here, get bullish, because there's probably going to be quite a few setups, especially if you find individual setups, or if you're a bull on the on your indexes, then yeah, look where you're going to get in, what's going to happen, and look for the squeeze. What do you expect to see? Excuse me, if there's a squeeze. If it doesn't play out, yeah, just probably step back on the sidelines and reassess. But if it plays out, it really should be an easier trade. And you can see as soon as we got this green candle here, 2 days or 3 days up, you go, well, definitely I know I'm confirmed that something's happening. And this green candle, you can see it pushed straight through that most recent high at 55, push through. Yeah, we got a bit of a back off there, retest sort of that breakout zone, and then we went again. So you could have booked some gains up near that resistance. Probably held on, just watched it. You got 1, 2, moved straight back into the MAs. Now the MAs are pointing up. And this again is probably on that's that second type of scenario I'm looking at. So this first one is entering nice and early after we've had that big complex correction and looking for that run up. This second one is more just looking at that daily. You look for that continuation pattern, that continuation jumping in after the market stepped on the MAs. It sort of pulled back the MAs, cleaned out a few of these late buys, tested forward 54 and is starting to run up. So for me, that's more of a candle entry than off a higher low. Does that make sense? I'll just draw that up. And for me, it's a bit more aggressive, but I like to see 1, 2, and then if you get that second day candle, or this is probably not a great one. Excuse me. Let me just find. It's like a two green. If you take out the 2 prior days highs, then it's worth looking at. And this green candle you took out, this prior day and the red candle. On this green candle here, you can see you took out the highs. You could just be a very aggressive entry with your risk just below, and then see if you can take. Well, you do get that continuation. The next day, okay, it followed on. Trying to think of show a better example. Maybe we'll go to a few stocks and just see what we've got there. Here's a good entry. This green candle again. It's probably a bit tougher on the ASX. Let me just share. Trying to think if anyone's got something that could be trending. Daily setup. Yeah, no problem, Vin. We'll look at that. Just remind me. Or shoot me an email just to confirm it. We'll talk about it again. Is all that making sense, guys? If I can find a share that's actually is playing out nicely. Oh, that's probably not one. It's VAC. Let's just see what that run up is. APT. All right, let's see if we can. So by candles, I mean for the second entry, say if you're just looking at that daily run up, you don't know how far it's going to go. On the daily, all I'm trying to do is pick out a candle entry rather than my high low. And you can probably see in here, might be a bit more. Yep, okay. There's probably, what we're really looking to is that pullback to the MAs on your daily, and you're looking to enter. You've got all your structure, you know what's happening, and you've got this. Say, for example, you've got a couple of red candles here. This green candle's washed out probably previous 2 highs. So for me, technically, we call it a higher high 2. So high 2 meaning the last 2 red candles or the last 2 highs, which means say this high on this red candle and the previous candle. If you can take that out, that's your entry pass there. Because what that's saying is that you've pulled back to the MA, especially when you've touched the MAs and you're starting to rally off the MAs. That could have been your HH2, is what we'd say. So you're trying to get in before the breakout of the high. I mean, that's the most obvious one, a breakout of that high, which was 768, buying at 769, for example, with your stop below 690. So probably closer to dollar risk, 80, 90 cents risk on that. But what you're trying to do is just refine. You're trying to take it nice and early. So that the idea behind that style of entry, when the trend is your friend, when it's rising, pull back the MAs, and you're just trying to take it on the previous 2 candles highs. Does that make sense? So that was that probably entry through 735. So you can see you've got a good 30 cents up your sleeve. If you're a breakout trader from that 768 high, you're getting what you're doing by that is minimizing your risk, and it's sort of a high probability setup when you're looking for that continuation on the daily. But that there is pretty much what I'm trying to refine with my trading. There's probably something here. It's not as clean to see. Following that, there might have been one on that green candle. You can see through that red, but pretty much that's the idea. If I can draw that up. So what we've got, say you've got a red candle, red candle, red candle, red candle, or something like that. Maybe an inside red candle. What we're trying to do is enter 1, 2, or maybe you take this one here. That's your entry through there. So as soon as you get a green candle that may, whoop, there we go, starts to take off and breaks through that high, that could be your entry through there. Risk down below the lows, and that there is really front running the previous high. And the high by meaning it's done something like this. You're front running a breakout trade. And it's a high, for me, it's a high probability setup, looking for continuation of this daily trend up. And you're looking to get in nice and early. So if it does fail up near those highs, or if it breaks out and starts to struggle, you've got something in the bank to lean on. Does that make sense there, guys? All right, put in some shares. We've got a couple in there. I thought that might have been a good little chat of just trying to refine your entries from your structure, whether it be off your high or low, like we saw just in here. High lows, there's probably been some in here, but using your structure as well. It was probably a high low just after that. Where are we there in June? Or using this type of price action where you're looking for that candle entry just for continuation of a daily trend that's up. Been a bit more aggressive. If that makes sense there, guys, that'd be great. If not, send me an email and we could talk about it further. Now, let's get into some work. Look at some shares. So the only three we've got at the moment is APT, VOC, and SLR. Got no actionable alerts. I'm trying to see a few different setups, seeing if they're playing out. But at the moment, yeah, nothing too much. So Lauren, with PH, is that PH something? PWH? We'll skip that. IEL. Let's go down here. IE. It didn't work. IEL. Okay, for me, it's obviously it's heading higher. The only thing I don't like, so this would be potentially you're trying to look for that candle type of entry off the MAs. Personally, I don't like that because I don't like the way it's gapped up here. I think if you're going to trade that, you're looking for that continuation off the MAs. I'm more inclined to think that's going to have a deeper correction, maybe close the gap towards that 1150 mark at 12 or even 1250, somewhere in there. Clean out a few of these late buys that bought it on the gap up. So for me, I'd just probably be looking at that. IPH, okay. I'll be just forgetting about that for the moment. Weekly, if you're looking at trading from your weekly, you can see it sort of had a gradual run up here, good sort of a correction back here. You can call that a complex correction back towards the end of last year, and it had a good run up. And it's only up until February, start of this month, it really took off, traded through that $12 mark, $12 highs. For me, that weekly is too extended to buy off the daily chart. Buy on a break, just sort of sitting on those MAs, buy off that candle style entry for a continuation trade. I can't do that. I'd rather see it hovering around the MAs on the weekly and just buying off your daily charts. So yeah, we'll see how that one goes. What was the other second one? IPH. IPH looks a lot better, and that for me was that this is probably more prime for the way I look at it. You can see we're just getting through as a clear level around that $6 zone. So here is more, you got a clear mark here. Even though we've had this big sell-off, it got smacked down here. So be it. We've lifted all the way back up, retested, we've come back down, and what we've done, you can see this price action here. It was all setting itself below that level at $6, and now we've just gotten through it on the weekly charts. And that weekly it's hovering around overbought, but it doesn't mean it can't do something like this. You can't just go bang, hover around there for 2 months and trade all the way back up to $9. That could easily happen. And if that's the case, we've got a good trade now on our hands. So the weekly's nothing wrong with that. If you go back to the daily, you could have bought that, was it today, through that high at 617, and you've got your risk below the lower 571. Actually, no, it's not. It is 551. So if you're happy with that sort of risk, great. For me, I'd like to just see sort of pull back a couple of days, sit on top of the MAs around 6, and then buy into it and see if you can kick up from there. But a lot of these bigger ones don't really do that. They just sort of have a couple of green days in a row. So we've had a couple of green after this sort of pullback. It's popped up. So yeah, we might go say from 525 to 620. say a buck, if you take a buck from around 550 to 650, could still have that a 650 move written on it before it has a pullback. We'll just see how it goes. But that, you can see that structure there on the daily, and that's coming from that weekly. This bit in here is really nice. That structure, when it sort of consolidates, especially on the weekly, this is a run up here. It's pulled back. That's only really a 30% pullback of this leg up. It's consolidated those highs, and it's consolidated below a key level. That there's a really strong move. So if you could have bought in here even, that would have been really nice. Taking a bit of heat here, but yeah, it's kicked off nicely. What else we got? IPH, NEA. What's wrong with my typing today? Lauren, probably for me, yeah, when the trend is up, and you probably find the weekly's up. For me, it's quite clearly I allocate a lower entry one to that. Does that make sense? So for me, I'm looking at that weekly going, that's extended from pretty much the start of the year. It's had just green all the way up every week. And it really starting to get stretched. It doesn't mean it can't keep going. So what I wouldn't mind, for instance, if you're stretched on the weekly and then you flick it down to the daily and we're coming off sort of that oversold zone, yeah, okay, it could be worth it. And there could be a lot more emphasis. This thing could just go to the moon. We don't know. But we've had a good solid leg up. Not really a complex correction here. We've taken out the daily anchor, if you can see that. Sorry, the weekly. It's that low around $1.40. We cleaned that out, popped back up, built that high low. Would have been a nice entry through that high of 175. That was an inside on the weekly with your stop below 145. So really, it wasn't too big a trade there, and you can see that's played out quite nicely. But where we are now, if I was in, I'd be defensive on that, defensive with my exit, just making sure it's nice and tight, but letting it go, obviously. You could potentially have your stop below 240 if that's the case, if you're long. If you're looking to get in, yeah, you probably could have got in today through that high at 269. So you got in at 270, pretty much right here, with your stop at 240. That's great. If it could keep going, I wouldn't bother with that because I think that's stretched in the daily, it's stretched in the weekly. Look, for me, I allocate a low probability to that, which is fine. I would be looking for something that's in a nice steady trend, and I guess by steady you mean it's gradual. It's say a 45 degree sort of if you just draw a line straight through it, whereas this is more straight up. It's nearly going straight up. So those sorts of things can come crashing down quite quickly. All right, that's NEA. QBE. Let me just think about this one. Don't like the daily. Look, that weekly is probably more the chart you want to look at. I might even have to go back a step. Yeah, so you're going to have a resistance zone up here at 13 and more up towards that 15 mark. Is that where the high was? 14, 15? That's the previous high. Okay, so you got some resistance up here. I don't see any entry for me at all. The way I would look at it, candle, this is not even trending at this stage. When it touched down to 950 down here, you could have bought it off the lows. I mean, again, you've got your inside high low here. You could have bought it here, and then you'd have your first sort of port of call would be resistance up towards 1150, 60. This previous consolidation through here just before it dropped off. But I don't really like seeing these things that push up and just go bang straight down, back down to the lows. You can see that on the weekly better, straight back down to the lows at 950, which is touched on a few times. So it's a key support zone. I mean, you can give it that much. In here, it was oversold on the weekly. You could have taken a punt there, off your high low on the daily, bought through here, great. But here it's sort of on the flip side. It's just got through the highs. We're getting a bit overextended on the weekly too. So it's sort of the reverse of this aggressive type of entry. Okay, does that make sense? So we have just popped through the highs. It doesn't mean we can't, we say back and fill, come lower high and come all the way back. It could come all the way back down here. I'd rather see pull back, more of something like this, a few days chopping around, but chopping around those highs. It could chop around then. And then if it starts to go, I think that's going to bring a bit more confidence and it could bang, up she goes. Tickers. Yeah. No worries. Go for it. Or you mean on the pictures, we got QBE. Probably do that. If this is what you mean. Let me do that. QBE. That came out horrible, didn't it? Oh, this is IPH. All right. Is that what you mean there, Shirley? I should be doing that. Just remind me next time. I'll put the code on. Ah, perfect. Is that a US? ORCL. Okay. So if you can get that. So that's QBE. I'm just holding on my hands at the moment, sitting on it. We're overextended here, overextended on the weekly. Again, I don't really allocate high probability, especially if it's both. If you're, say on the weekly, somewhere you're, 50, 60% on the stochastics, we're somewhere around here, this middle zone. It's stochastics are going from oversold to overbought, somewhere in the middle or towards the top up, doesn't matter too much. That's good. But when you've been chopping around overbought for a while, how many buyers left on the sidelines to want to jump back into this one? And you can see big blowout like this to 12.10. We had a high of 12.11 and it's rejected straight back down again. We're down to, what are we down? 11.76. That's 20, 30, 35 points. Am I right? 35 points, cents, sorry. I don't like that kind of rejection. A strong market shouldn't really have rejected. And that's really just blown out these last highs, cleaned them out. That could have really just stopped in a few buys, buying through the highs and then turn around and squeeze them back out and then move lower. So you're always going to be wary of what's happening. I don't really like these moves that have just gone straight up off the lows. I like to see, push up, consolidate those highs a bit, and then go. And then I'm happy to jump in. What else we got? Hub. I'm going to have to be quick through these ones. Hub I do like, and it's not really so much this daily. I find this weekly. You can see it's had this good run up. It's chopped around up here, but what it's really done is if you can see, held that anchor. And what's this one? Let's just do that old. Good. So you can see the markets, it's pressed up. We've had this last ditched effort really, and this is what I expect. I mean, if you get that solid thump higher, I'm expecting some sort of pullback or consolidation or something. I want to see a complex correction of some sort. Complex doesn't mean it has to take out the anchors. So that's the anchor down here for this weekly trend up. You pretty much consolidate here, bang, straight up, straight. As soon as you get through the highs, that to me is the anchor. It's got right up to 1550, and then you've seen some really choppy action, but it hasn't taken out the anchor. Okay, you can see this is all just choppy, chop, choppy, chop, chop. Price action. Come on, that there. So it's still a bit choppy on the weekly. What I'd rather see, and this is probably the first time we've really sat on top of the MAs cleanly. This wasn't clean here. We didn't do it here. Didn't really do it here before we pulled back. Here again, we didn't do it. There wasn't anything nice. I guess if you break it down to the daily, it's gonna be a bit clearer. This is the first time it's sort of contracted back to the MAs. They're holding. If you bought through here, even on the daily, and you've got your stop through here, that's great. That's where your risk is around 12, breakout. It could easily do the same sort of thing, blow up to 15, straight back down again and squeeze you back out. But really this, I guess this action through here is what we're looking at. And I think if that starts to get a bit of a move on, if we start to push up, pull back and build another higher low, especially if you drop it down to the daily, or we push up to the 15 and we pull back and build a higher low and consolidate just under that level, that previous high, I think they can easily run up and take out 15 and just go, because all this work here has been done. And that there, a lot of people have been maybe eyeing this one off, I mean, myself included, I've been eyeing this one off for quite a long time and just looking for something that looks a bit cleaner, a bit nicer, a better entry. And I think this is the first time really showing some signs of pushing up, consolidating over quite a few days rather than chop up, straight back down, up, straight back down. There was nothing really from the daily prior that would have led me to believe we're getting a good run. This is probably the first time you can see pressed up, pull back. This is your anchor at that stage around, say it's 12 bucks, pull back, pop up, lower high, press back down, didn't take out that anchor, and then we turn around straight back up through that high at 1365. So it's starting to show some good signs. Yeah, all I'm really looking for here is I'd like to see that press up, get a bit of a run on, but be more contained. Pull back to the MAs, look for your entry, and then up she goes. And I think that will drag in a lot more buyers, especially if it's towards these highs. If it can consolidate just below 15 or say, or 15, 14.50 around those highs and do a bit of work, then yeah, I think it could be a good one. Now, where am I? IPH, we've done that. ING, look, this is a good one. Just looking at that daily, sitting on the MAs now. So if we get some sort of setup like this, a high low, in we go. I think it could be a good one. 2 million shares, ING, chickens. Everyone likes a good chicken. And another thing we look at with the MACD, for instance, I like to see if it can come back to the zero line or around that zero line like this, if you can see what I'm talking about. So this was prime. Here, I'm getting the hang of this now. This, for me, was prime. There's a few setups. Look at that higher low. Look at that. It's coming off sort of that oversold zone. And then the momentum's really is still holding to the upside. You've got to pull back. I love seeing that pull back to the zero line after it's pushed through. And you can see previously we've had that push up through, got a bit extended up here, pull back. So this is all your indicators we're talking about at the moment. And if you put that in conjunction, these two are lining up. That's in a prime zone. If you're looking at stochastics, there's a bit of selling pressure come in, but it's getting absorbed. And the same here, similar type of thing. If we can sit on the sit on the zero line. If we can do that here, great, because we're in the same sort of thing. We're in that overextend on the downside, but you can see the trend has been up. Pull back, high. We're looking for that high. So all we're doing now is looking for that high low zone. Does that make sense here, guys? So I think this is one that's going to come in as alert. Thank you, Lauren. Legend. And if you can see this type of setup, and then that's probably prime for me. I like that. 1, up, 2, washed out the previous low. Oh, I'll draw this a bit nicer. Let me just clear this out. There we go. So this entry here was, a cracker. So what you've got is pullback, touched up. Okay, secondary leg lower, washed out that zone, washed it out on this little pop through that $3.80 area, pushed up and just broke out of that contraction. So we're looking for, again, expansion, contraction. We're looking to go into expansion again, and that would have been a nice entry straight through. It was about 395. Your stop could have been right down here, about 380, and looking to go into that expansion. It's played out beautifully. You've probably taken a bit of heat here, or you might have just got out and looked to re-enter. Similar type of thing, pull back, high, low, off she goes. So all we're really looking for is if we can get something that just basically pops up, builds a high, well, that was horrible, wasn't it? Builds a higher low, yeah, then we're going to be in, because that's in context of the longer term trend up too. All right, I'll get rid of that. RHP, where are we now? RHP, I like it. I have liked it for a while, but it's probably the opposite of what we just said. We've got to be. I don't like the fact that you get these good days, and then the next day is that rejection. So when things get a bit out of hand on the upside, there's always that big blow off up, and then pretty much you're either going to get a complex correction down or a lower high is going to come into play. So I think potentially with this one, we've got a bit of time up our sleeve, and you can see that price action is starting to get a bit excited, especially the start of the year. That the rallies are getting a bit stronger. It's going near vertical. There's not many sellers in the way to put pressure on the buyers, and it's getting a bit ahead. People are chasing it higher, especially after a few days ago. What was that? 18th, that green candle there, and we've got a couple of red candles in a row. Whether we sit on top of this MA again on the daily, great. Probably you could easily be a nice little trade here, and then probably for me, if that was sitting on top of that 160 zone, it could give me some sort of entry. It could be worth it. But if it gets up to 175 and starts to fail, I'm straight out on that one, because I think it could be, or you start to fail a bit lower. Say you get 5 or 6 cents into your, or up your belt, in your belt, or whatever you got, in your pocket. There we go. You still want to be a bit active, because I think it's getting a bit long in the tooth on that daily chart. That weekly, you're coming to the zone up towards that 180, 190, where it's rejected a few times prior. I know it's a long time ago, but technical traders, anyone's going to be looking at that same zone thinking, oh, hang on a second, we're getting up there. We're starting to get rejected. Last week, rejected completely. Are we going to do that again? So for me, I probably wouldn't touch it. But if you had to, I'd be looking for some sort of candle entry, candle style, like a continuation type of trade, however you do that. Be ideal if we got something like this. You can see this. There's no reason why we can't do that like we did at the start of the year. Green candle, consolidate around those highs, give you an entry, and then that's going to bring in more buying. But you need some time to go by to really set that trade up and then go. So time goes by, those MA sort of contract slightly, but they're still up, and then you're going back into expansion on a really, it's more of an aggressive trade. IPH 590 tickers. All right, let's get into IPH. Yeah. Close Helen. Sneaking before. ING, such a choppy chart. I heard those. Yeah. We'll see how it goes. This one, actually, I don't mind this. AHP, it's not trading a lot. Look at the volume. So what's that? It's less, it's only about 2 grand, 2 grand on the offer. You can see it, and the level behind that, 159.5, is only 3,000 shares. So what's that, about 4 or 5 grand? So it's not, it's pretty thin. And after that, you got 160. You've got quite a lot at 160, which is fair enough. And you can see that, in there. But pretty much after 162 and a half, 2.5 cents high is only 1,000 shares. That's $1,500. Oh, sorry, $1,600, and the same at 165, a few cents higher again. So you've got to look at the volume if you can. So if you're looking to trade this one, look at the volume. It could be quite thin on the upside, which is okay, fair enough. So if you're going to buy on stop, for example, or hit the market, buy at market, then you could actually get a few cents slippage. So it's one just to be careful of. All right, I think we've gone through everything. Yeah, I think we've pretty much gone through everything. So any questions there? We might just call it a day. I'm always interested in VOC's got my interest now. I want to see. I like this. I like this sort of rejection. A couple of days. If anyone can see that on VOC, a couple of days down. That's sitting prime on top of the MA. So if you're looking for a new trade, potentially get it through that high at 365, preempting a breakthrough, say 370. I think that one could go. We'll just see how it goes. Yeah. Just reading your stuff there, Helen. All right. Well, that's probably about it, I think. If anyone's got any more questions or if there's something that we've missed out on, just send me through an email, support@tradesetup.com.au, and we'll get through it. Otherwise, thanks very much for joining me. We'll be back in on, of course, on Monday again at 12:30, same time, same bat channel, and then we'll just follow through from there. So any questions in the meantime, feel free. AWC. Gino, good. Well done, mate. I'll get through that. I know you're a very kind-hearted person, so I'll do that. I don't like just going back from daily to weekly. For me, let's do that. AWC. Where did you come up there? Oh, actually, I've got two. I'll do that one other from Shirley. So quick look at OR. So AWC, just looking at that daily, I'd find that tough because if you're looking at a daily, you're coming into a resistance zone. So I think I always find those tough. So what you can see, the market has pretty much, you call it distribution through here. And you've had that squeeze up here. So that's just trapped, that gap up has trapped a lot of buyers. You know, there's always going to be buyers. I don't know if it's in the back of news, whatever happened. I always get, concerned. I would never buy on a gap up like that. I'd rather see some heat come out of it, a pullback. And if it doesn't close the gap, fine, I don't care. But I don't want to buy on that sort of a day there. I would even be dropping it down to the intraday to see what it's doing. Say a 30-minute chart, 5-minute, to see what it's doing and see what sort of selling pressure is coming in. Because that selling pressure is probably going to be over the couple of days. So that gap up there, especially after this distribution, is just cleaned up. It's been trapped a lot of buyers up here. And then they've turned around and been squeezed out, a day or two later. The next day was a red candle, but it wasn't too bad. Then it's gapped down again, and then we know what's happened from there. It's been sold right down. So if you bought it in that day and you were holding it right down here, and you're still holding it, you probably find that you're getting closer to break even now, and then there might be a few sellers coming back into the market just because they've held it. They might have held it through here. They've held it through this type of move here. So that's why it's important to look at zones. That's distribution through the year. Okay, the market sold off and it started to build again, but it hasn't. I mean, if you're bought in here or in here, that's prime, and then you'd be targeting up towards here. You've got minor risk, 2 to 1, 3 to 1, or even 4 to 1 at the moment, up towards that 280. But if you're looking to buy in here, I'd find it a lot tougher because yeah, right up against a pre-distribution zone, resistance zone, whatever you want to call it. There's potentially a few traders that bought it, above or the top end of that zone are still underwater if they're in. Does that make sense? So there could be some selling pressure starting to come back in. And I'd think up in these zones, you tend to lack a bit of that buying pressure also. All right. So that's why I'm always tentative to start buying up into previous resistance zones. I'd rather see what it does. If it goes through, I mean, don't forget, if it does go through, don't kick yourself because there's always trade something else. There's always a lot of things to trade. Um, it could just keep grinding up and through. If it presses up and through and then comes back down and you build your high low, then okay, go off your high low. You know where your risk is, and your premise is it's already broken through. It's starting to show some interest, and you're buying off your pullback. It's as simple as that. If we go back down to the weekly, yeah, this is October. So that was the start of the overall sell-off. Got sold off. It's come straight back up again. So that weekly chart, it's not, for me, don't really like it too much. It's not, again, it's coming back into that previous sort of distribution zone through, say, 280, 290, or 280 to $3. Smack there now, 280 roughly. Big washout here before we had that pullback. I'd rather see a pullback in the weekly, back to the MAs on the weekly, and you can drop it down to your daily. Take a bit of heat out because there's been quite a bit of buying pressure up here. Last time we were in this overbought zone, we were up here, well, not even up here before we got sold off. So every time, you get overbought, you get a bit of a sell-off. So if you come into a zone, the weekly's overbought and the daily's, hovering around that overbought zone, again, it's not a high probability setup for me. So I'd sort of just be keeping this one on the radar for now. If that makes sense. Let's see if we can do that last one. What was it? ORCL. Let's see if we can get that. Oracle. Oh, makes a lot of sense, doesn't it? Never traded any this US stuff. How you going trading this, Shirley? Entry at 53.09. Go away. 53.09. Stop loss of 188. The price tag of 58.31. All right, let's go back to the daily. So me, I'd personally, just looking at this, I'd be trying to refine that entry. If we're looking at the right one, because it's just got through a high here, and we're up. Oh God, we're up. If you just do that, quite a, it's seen a bit of action there prior. All right, if we go back to the weekly, let's just see what the weekly's showing us. Stop loss of 188, price tag of 58. I'm guessing you mean 52.88 maybe. Anyway, so for me, if I'm looking back at the weekly, that weekly looks great, but I don't like the way it's got a double bottom here. It's come straight off. I would rather see, again, my trusty high lows, something to buy from. Instead, it's just gone boom, straight up. So it's coming into, just like we said before, with, what was the last one we just did? What was the last one? Anyway. Oh, AWC. It's come into sort of that distribution zone where it's spent some time in there before. So I'll be inclined just to look for a higher low to buy from. Something like this or something like here, even if it extends up through the resistance and it pulls back, but you want to see it within the top 2/3. And this is the leg I'm looking at. This is my leg up, most recent leg up. I want to see it in the top 2/3 here. So for instance, if I just get a snapshot of that, when I say the top 2/3, that's my leg up. I want to see potentially something like this consolidate and then bang. I expect that consolidation is going to be enough to really drive it up and through really strong. I'd rather see that, refine my entry if that's going to play out. I mean, if it goes on without me, I don't care. I just leave it. But if it can do something like this, like we did pretty much here, that would be awesome. That would be great. So when you've got a strong leg up, bit of a blowout. This one hasn't really had a blowout just yet, where we saw the blowout on this green candle. You can see just in here, bit of a blowout. Then what happened? It consolidated those highs and then bang, we got that really good strong move up. Pretty much consolidate channel, well, not channel, but sideways, and then bang, up we went. And that could have been a better entry, through the highs, stop below the low, see how it goes. But at the moment, for me, I can't buy off just a pure candle towards the highs into a resistance zone potentially or a distribution zone. And we're extended, so I'll just be keeping that one on the radar for now, but we'll see. All right, guys, I will call it a day there. A little bit of an extension, but we've got through everything. Yeah, no, exactly, Helen. That's exactly what I'm thinking there. All right, guys, thanks for joining us. Just go down one step. Oh, whoa, what happened there? I don't even know how I did that. Price line. Ha. All right, I'll have to figure that out another day. The daily, well, you could have a stop below here, just below 50. If you're buying into it, if you want to buy that, break up, off she goes. But yeah, I just don't like all those days up. I'd think, yes, like Helen said, the weeks and days, all that time it's spent going up from say 42 up to 52, $10, which is about 20%, 20%, 20% gain. Anyone that's been holding it down here is probably going to be looking for a place to sell, and it's prime. In this zone, it's probably going to be prime. All right. Thanks, Gino. Thanks, Helen. Thanks, Laurent. Thanks, everyone else, actually. Like I said, we'll finish up there. Thanks very much for joining us, and we'll be back in on Monday at 12:30. Have a great weekend. Have a great week. And if you're in the chat, we'll speak to you in there. Otherwise, we'll speak to you next week. Thanks, guys. And finally, if you can leave us a like, that'd be much appreciated. Thanks, guys. Bye.